Imagine a single 33-mile wide passage of water, and every morning, 20% of the world's entire oil supply passes through it. Now imagine that passage is completely shut. That's not a hypothetical. That's happening right now, and the financial consequences are only beginning to unfold. The Strait of Hormuz is a narrow choke point between Iran and Oman. It connects the Persian Gulf, where Saudi Arabia, Iraq, Kuwait, UAE, and Qatar all export their oil, to the rest of the world. Before March 2026, roughly 20 million barrels of oil pass through this strait every single day. That's about 1/5 of all the oil the entire planet consumes. But on March 2, 2026, Iran's Revolutionary Guard officially closed the strait. Tanker traffic dropped by 70%, then to near zero. Over 2,000 ships and 20,000 sailors are now stranded inside the Persian Gulf with nowhere to go. The International Energy Agency called it, in their own words, the largest supply disruption in the history of the global oil market. So, what does this actually mean for the global economy? Let's break it down into 3 layers. Layer 1, oil prices and inflation. When the strait closed, Brent crude immediately jumped 10 to 13%, reaching $80 to $82 per barrel within days. Analysts at the Dallas Federal Reserve project that if the closure lasts just 1 quarter, WTI oil could hit $110 per barrel, 2 quarters, $132, 3 quarters, $167 a barrel. The IMF has already raised its global inflation forecast to 4.4% for 2026. That means higher prices at the pump, higher electricity bills, higher shipping costs, which means higher prices for almost everything you buy. Layer 2, food and fertilizer. Here's what most people don't realize. It's not just oil passing through the Strait of Hormuz. 1/3 of all global fertilizer trade also passes through this waterway. Fertilizer prices have already surged. Urea went from $475 per ton to $680 per ton. This matters because spring planting season is happening right now in North America. If fertilizer doesn't reach farms, crop yields fall. And when crops fall, food prices rise. The IMF warns this hits low-income countries hardest, countries where food is 43% of all household spending. Layer 3, global growth collapse. The IMF has cut its global growth forecast from 3.4% down to 3.1% for 2026. That doesn't sound dramatic, but remember, we were already recovering from years of trade disruptions. This shock could push parts of Asia into recession-like conditions. Bangladesh, Pakistan, Vietnam, countries that import nearly all their oil from the Gulf, are already declaring energy emergencies. Pakistan itself has officially requested that Saudi Arabia reroute oil shipments through the Red Sea port of Yanbu, bypassing the strait entirely. Iraq had to shut down its Rumaila oil field, one of the world's largest, because storage capacity filled up with no way to export. Not everyone loses from this crisis. The United States, a massive oil exporter, has actually increased its crude and petroleum exports to nearly 13 million barrels per day in April 2026. Higher oil prices benefit American energy companies directly. But for Asia, this is devastating. 84% of the crude oil that passed through the strait went to Asia, primarily China, India, Japan, and South Korea. These manufacturing economies are now facing higher energy costs, higher production costs, and currencies under pressure from capital outflows. Europe is also exposed. Gas storage across the continent was already at historically low levels, just 30% capacity after a harsh winter. Dutch gas benchmarks nearly doubled by mid-March. Meanwhile, hedge funds bought a record $86 billion in stocks over 5 sessions as markets anticipated a resolution. But the underlying economic damage is already locked in. The Strait of Hormuz crisis is a live demonstration of how fragile the global financial system really is. One narrow waterway, one geopolitical flashpoint, and the entire architecture of global trade begins to fracture. Whether this resolves quickly or drags on for months, the economic fault lines this has exposed are real, and they are deep. If you want to understand how modern finance really works and where the next break might come from, subscribe to Economic Fault Lines and drop a comment. Which economy do you think gets hit hardest by this crisis?